Howdy, folks. Welcome to the Daily Coin. My name is Rory, and today is Wednesday, December the 19th, 2018. And I have the very distinct honor, great pleasure of welcoming to the show for the first time. I've been on his show, and now I'm returning. I'm asking him to come and pay us all a visit here at the Daily Coin. And I'm speaking of Matt from Silver Fortune. Matt, welcome to the Daily Coin.
Hey, thanks for having me on, Rory. You're right. I did have you on quite a while ago. That was like June of this past summer or something like that, and a lot of silence since then. So I'm glad to be back with you and speaking about some great topics today.
Yeah, we've got I've got several questions lined up for you, and we've got a lot going on. We've got interest rates coming online later today. We've got J.P. Morgan in the courts over a class action lawsuit. We got silver eagles, gold eagles falling off a cliff. So I want to start with your short-term view of the metals, Matt, and say through 2019. Do you see them higher? Do you see them lower from here? Personally, I see them going up. We're coming into 2019, in particular, the second half. I'm going to been out on the edge for well over a year, close to 2 years now, saying that 2020 and into 2021, 2022, metals are going to start moving higher. They're not going to look back. And the second half of 2019, I think we're going to start to see some real footing gathered and momentum. We're going to start to see the very beginning of momentum. What do you see?
Yeah, I would have to agree heading into 2019, and that's not just me being the always bullish on precious metals. If people have been listening to me over the last 6 months or so, there's been plenty of times where I basically said metals could probably go lower. There's a lot of reason to believe that they would, and honestly, I heading into maybe the middle of December, I expected maybe a little bit more weakness. I expect us maybe be bouncing off the lows, but these past couple of months have proved to be kind of exceptional. I really wonder if it's almost like for several years there in this so-called economic recovery or boom, whatever you want to call it, there were certain kind of I guess rules that governed how the markets seem to work. The whole buy the dip. Every time the markets would be down 200-300 points, somebody would miraculously come in and buy the dip. Maybe sometimes that was organic because people just knew it was going to happen. Other times it was more nefarious actors in the market. And there was always kind of an eternal optimism that a recession is nowhere near to 2 quarters, 3 quarters away. No, we're talking like 3, 4, 5 years away. The debt levels, interest rates, we don't need to worry about that now. Just in the last couple of months, we're seeing, I think, a real shift in sentiment. I think we're kind of seeing that in precious metals too. I say this basically because the precious metals market seems to be behaving somewhat differently. Since I'd say October of this year, you're seeing. And don't get me wrong, as much as I think metals are manipulated, you do see some market forces I think working there. And one of the big ones that I've seen lately, when stocks have been having rough days, is that you actually see metals bid to some extent. It's not what we'd expect, and it's certainly not as much as I think we'll get in the future, but you'll see some days where stocks might be down, the dollar might even be up, and you'll still see silver and gold rising, and so that just leads me to believe that, because we haven't even seen the weakness that I expected going into the end of the year, silver around 14, gold potentially around 1,200, maybe a little lower than that. I think, we're turning the corner here. I'm not calling silver at $30 by June or gold by 1,500, but I think by February, March, a return to more reasonable it's not reasonable. But levels where we maybe saw them last year, $16, $17, and kind of as you were alluding to, that's the beginning. That's getting a bit of momentum behind them. I've heard some people, including Lewis from Smalgold, who you've had on recently, I believe, as well as Steve St. Angelo, talk about how maybe it's the paper markets and the momentum there that kind of get some momentum started. And I wonder if that's the case. If gold can top 1,300, if silver can get back into maybe the $17 range, that's just a bit of momentum. That's not the end of manipulation. That's not the big move up. But we kind of have to start with baby steps, and so I do think that that's where we're heading into 2019. You also have a lot of other factors coming online. You have the fact that the Fed, which we'll get to here in a little while, but the Fed is certainly pivoting. It seems like they can't pivot quick enough towards a different towards a more dovish stance on rate hikes. Now, will they follow through? Will they not? That remains to be seen. But again, the stock markets we're seeing they're singing a totally different tune than they were 6 months ago. We're seeing a lot of other bubbles have their air let out, slowly but surely. You're seeing it in the auto market, you're seeing it in the housing market, you're seeing it in the corporate debt markets, which is fascinating to watch that as well. China's economy is kind of on the ropes, not on the brink of collapse, but like their growth has been crucial to global growth for the last 10 years, and if they can't sustain some decent growth, you wonder where that leaves us. So I really wonder if 2019 is going to be the year where, I'm not saying everything falls apart, but it's going to be the pivot point, end of 2018 and 2019. I wonder if it's going to be similar to, I don't know, early 2008 heading into 2008 and 2009 in terms of how important that was in the whole scheme of things, and of course the Great Recession back then.
I think that 2019 things are going to be a lot different, and I think that it's you mentioned early on that you think that some of what has been happening is been conducted by nefarious actors. I think that it's all nefarious actors. I think that it's all nefarious activity, and I think that what you're a little more optimistic in coming out with, the January, February, March timeframe. I'm looking more at September, October, November timeframe of 2019, when we're going to start to see some real movement. And are we going to? I'm not even going to consider putting a number on it. I'm just saying that we're going to see things move higher and more stable. We're not going to see these waterfalls to the downside in 2019. I think that those are over for now, but could be wrong. Probably am wrong. Everything's rigged. Everything is rigged. Everything. So that's the one thing that always has to be kept in mind, that regardless of what we think or what we believe or what the charts are saying or what this analyst is saying, none of it matters. None of it matters. And we've seen that time and time and time again, over and over and over. So none of it matters. And you mentioned Louis Camerasano, and I did speak with him just a couple of days ago about the silver and gold eagles, the sales falling off a cliff. I mean, what's your take on it, Matt, as far as why is this continuing to happen? We're seeing year over year, 2016, 2017. Now, the second half of 2016 is when they really fell off a cliff. And then 2017, they're way down. The sales were way down. And now we're seeing that again in 2018. Sales are way down. What's your take on the reasoning for that?
Yeah, I mean, I think it's multifaceted. I think there's a lot of different reasons for it. If I could give you five, off the top of my head, in no particular order. First of all, you have, I think, a bit of a stagnation of prices. You saw this in a lot of 2018, for the good portion of the first half, through maybe May, you had them kind of trading mostly in a $16 to $17 range, with some exceptions. And then after their drop off below 15, mostly in a $14 to $15 range. Now,
Yep.
price moving up, price moving down, that sparks demand, especially, physical demand. And so that would be one reason. Looking a little bit into the past, we are 1 year and 1 day removed when we're recording this. I guess 1 year and 2 days removed from when you're releasing this, from the Bitcoin boom when it eventually hit its top. Now, some people I think overplay that in terms of how much it affected demand, but I think to some extent people kind of got swayed by that because unfortunately I think a lot of people get into silver and gold because they expected it to kind of be their proverbial Bitcoin to go to the moon as soon as I got into the market. So I think that played maybe a minor role, maybe a little bit of a larger role is something I would call the Trump effect, namely that conservatives or stackers tend to lean conservative. I mean, I have people commenting that maybe more on the liberal side of things, centrists, certainly plenty of libertarians. But I think a lot of people, unfortunately, got this idea in their head that as soon as Trump won the presidency, that some of the economic concerns of the Obama era were no longer there. But I mean, and this isn't bashing Trump or anything, but the national debt is still a problem. The economy
Right.
and those bubbles, they haven't popped, and that's not me talking poorly about Trump. That's just being real, and I think that has a very real effect on it. Just a decreased interest in it, and beyond that, I would say some people are probably just set. They stacked all the way, who knows how long, decades ago. Maybe they started in 2001, 2008. 2012, somewhere in that time period, or even since then, and they're just kind of bought out. They've had enough. That's what 4 reasons. That's probably a big part of it. I think, off the top of my head, just kind of a fatigue, I guess, is the last one. It's fatigue. People keep hearing about the skies falling and whatnot, and it's next 6 months, next year, well, like you were talking about, your prediction of 2020, 2021, 2022, you don't always hear that from a lot of people. Instead, you'll hear in January or in February or in March, such and such is, momentous event, is crazy collapse of the economy is going to happen. And you know what? Like over the short term, I think we've learned that's a great way to sell metals. Over the long term, it's a really good way to lose customers, to get people very disinterested and kind of disillusioned with the whole, alternative media, alternative financial media, because
Yep.
they hear it enough times, they don't see it happen, and they realize like maybe these guys are either just lying to me or they're just
Or they don't know.
or they don't know. Yeah, they're just totally
Exactly.
misinformed. And so,
Yep.
that'd be, I think, a big part of why it's dropped off just in the last, 2 years roughly.
Yeah, I was saying that when I asked Lewis the same question, and you support one of my theses, and that is that the stackers are stacked up, and I know that's the case for me. I personally am only getting a handful of what I actually want. I've got
Yeah.
my base, so now it's more coin collecting and going for the beauty and going for the rarity, and it takes time to find those. It takes time to find a beautiful coin. It takes time to find a rare bar. It takes time for that to happen. So I'm not, doing things like I was 2 years ago, and and I think that is a part of it. I think that what you said, that the Trump effect, I think that's a huge part of it. People don't feel as compelled, that they somehow think that a lot of the problems have disappeared, when in fact they haven't. They've gotten worse. They're still continuing to get worse. And you mentioned one, the bubbles, and we're going to get into that in just a minute. But I want to ask you about the class action lawsuit that's just been brought against J.P. Morgan for precious metals market rigging. I mean, in what role do you think that that's going to play, Matt, going forward in the markets? I mean, what effect, if any, do you see it having on market rigging? Do you think that market rigging is going to pay any attention to it whatsoever, or is it just going to be like what happened with Deutsche Bank? It had no effect.
Yeah, it seems like we hear these left and right, and as you were kind of saying, everything is totally fake. The truth of the matter is that it's not just silver and gold. I mean, don't get me wrong, that rigging and that manipulation occurs, but this happens in debt markets. It happens in equity markets. It happens in
Yes.
interest rates. There's big
Oh
scandals
yeah.
over interest rate rigging and whatnot. That's an important thing for your viewers to understand as well. I'm sure many of them do, but that this goes much deeper than just precious metals. But we know that suppression of silver and gold. I think you can make a lot of money by doing it. As large financial institutions, and I think that there's some good reason to, because of I guess the deterrence effect it has on some investors. But as far as a class action lawsuit against J.P. Morgan, I tend to be cynical about this. If anything happens, and I'm sure you're the same way, it's a slap on the wrist or something like that. I won't name names, but there'll be people out there that will say things like, "This is part of the big plan of again." I'm not bashing Trump here, but of Trump going after the corruption in Washington or in the finance world or whatever, the big banks, and I'll see it when I believe it, or I'll believe it when I see it, I guess. But
Yes.
right now, I tend to be cynical of these class action lawsuits. We had that J.P. Morgan trader who was recently convicted. Very damning evidence, basically, of him saying, talking about how he did it with the knowledge of his superiors. It was a common practice to I forget what it was, if it was naked shorts or if it was spoofing the market, but it was blatant
Spoofing.
manipulation, spoofing,
Yeah.
yeah, and people don't care enough, I guess. What the day will come when people care more. But right now, there's just not any political pressure to do it. There's no political reason to do it. I mean, how many voters are you going to gain by bank in regards to manipulation of one? There's not any reason for it politically. Unfortunately, I think a lot of times that's how Washington, or that's how the courts operate. Sometimes it's just a political motive, and so I tend to be cynical. Business as usual. I mean,
Yeah.
that's
Yeah,
how I
unfortunately,
see it.
I have to agree that I'm just as cynical, because when you have something like the LIBOR rigging that happened a few years ago, and that was determined. I think there were six different banks that were caught up in that dragnet, and then the forex market rigging. I mean, this impacts literally every single human being on the planet that uses currency. These two markets being rigged, and nothing happened. I mean, the banks were fined, and they're business as usual. And for the banks, it's just the cost of doing business. That's it. They just pass those so-called fines along to the customers, and the customers don't even realize that they just got shafted out of $2 billion, and things go on. Everything is just hunky dory. It's all good. It's great. Everything's great. It's like,
Yeah, pretty much.
and I mean, and it's the economic bubbles, which you had mentioned just a minute ago. I mean, and there's a lot of bubbles out there floating around. There are a lot. You mentioned two or three of them, and which one of those do you see as being closest to the pin? And in light of what we were just saying, does it even matter?
Yeah, that's a tough question, because sometimes myself, like so many others, can kind of suffer from what you call recency bias. So what you've picked up on most recently or been reading about recently tends to kind of come to your mind first. And so, I recently did a video talking about the corporate debt sector, and some of their liquidity problems there, as a lot of corporate debt is basically being downgraded to either a lower grade, which is maybe still technically investment grade, or to junk bond status, and the effect that could have on the broader corporate debt market. But as far as the bubble that's closest to overall just kind of being popped, that's a really tough question. There's a lot of ones that come to mind. Let's see here. I would say two countries that would be kind of high up on my list in terms of being in a tough position right now would be Australia and Canada, particularly related to their housing market as well as their connection to China's economy and what's going to spill over from China's economic slowdown into those countries. So basically, Canada and Australia, they're two countries that a didn't experience as large of a reduction in housing prices, as large of a popping of the bubble back during the subprime crisis that we experienced here in the United States and much of the rest of the world experienced. B, they also have benefited a lot from, I guess, outflows of money or capital from China. You see these cities like Vancouver or Sydney or whatever. Garnered a lot of attention from wealthy Chinese billionaires buying up a large amounts of real estate. We know the Chinese, like their real estate oftentimes more than they like their stocks, and so those two things combined, it'd be like if the housing bubble here in the United States never fully popped, if and it probably didn't fully pop to tell the truth, but let's say it never got to crisis mode, that somebody stepped in too early or quickly and let it inflate even more and more. I mean, that's kind of where they're at. And I think we're already seeing some evidence of a slowdown in their housing markets. This time around here in the United States, I'm not convinced that the housing market will play as large of a role as it did during the Great Recession, the financial crisis. But in Australia and Canada, those are two countries I'd be very worried about that, and especially keeping my eye on what happens with China. So that one would come to mind. I mean, there's other ones as well. Deutsche Bank, as we already talked about here, I think they're kind of on the ropes. The German government is discussing potentially a merger between Deutsche Bank and Commerzbank, which is another very large German bank, looking at changing the rules to make it easier for these two companies to have kind of a clean merger. That kind of sends some signals of maybe just how worried the German government is about one of their own banks. I mean, how ironic would that be? After years and years of kind of conducting a lot of EU policy, it would seem in their own favor, and a lot of other countries like Greece, kind of submitting to the EU's authority time and time again. How ironic would it be for Germany's banking sector to be the one that ultimately goes under? But that's one that especially worries me because of Deutsche Bank's derivative exposure.
Right. And that right, and what you just said, their Deutsche Bank's derivative exposure, when you were talking about them changing the rules so that Commerzbank and Deutsche Bank could merge, that's exactly what's going to happen because of the derivatives market, because Deutsche Bank will not be allowed to fail. Deutsche Bank will not be allowed to create more problems, because if that bank goes down, then we have serious problems because of their derivatives exposure.
Yeah.
So didn't mean to
Yeah.
interrupt you, but that's
Oh,
an important part.
You make a good point. I guess the way I had heard it was that some of these change in laws, they had something to do with it had something to do with valuations of assets, or do they have to be, I guess, the new value of assets have to be taken into account prior to the merger, and they're trying to do away with that. So it makes you wonder. Maybe Deutsche Bank is in some serious financial trouble. You'd see that if you looked at their balance sheet, an updated balance sheet
I can
that
see
doesn't
that
have
from Tennessee.
right, exactly.
I don't have to look at their balance sheet.
Right. If you saw an updated of maybe just how bad things are, the merger, as you said, just nobody would say yes to it. Commerzbank would probably be in revolt over it, but it makes me wonder. You're right. I think they are too big to fail,
Right.
or they're going to be considered too big to fail. Deutsche Bank going under. Their influence has been reduced in the last couple of years, I think, because they've just been struggling so much, and I think they're not as big as maybe even some other European banks, but them going under would be akin to Citibank going under, Bank of America, Wells Fargo. So that would obviously be a big deal, and I think would be the event that would kind of set off a broader contagion event. But I guess that's my thought on a couple of bubbles. Here in the United States, it's hard to pick just one. I brought up corporate debt. There's obviously the stock market, there's the tech bubble, auto market. Yeah, I don't know, but overall, I mean, it's not to say that they're too small to notice these bubbles. It's just that there's so many large ones, and it's just a question of which ones will, I guess, pop first.
Yeah, and once again, it's whichever one, if one of them is allowed to act normally and do its thing and blow up and blow apart, then it would affect the overall economy. Then it would start affecting all of these too big to jail banks.
2011 and the Euro crisis, and we also had, I think, some government shutdown talk in that time period. 2015 and 2016, we saw some weakness in the stock markets. We saw weakness in the U.S. and Chinese economy. And of course, both of those times, and every time things have started to look bad here in the United States, China, the EU, things have kind of been reflated, right? You've seen it from the People's Bank of China with really, I guess, loose monetary policy to encourage more debt creation, more spending, more economic growth. You see it here in the United States, honestly, from Bank of Japan, the Federal Reserve, from the European Central Bank, massive amounts of QE, interest rates, real interest rates are that are below 0%. And you even saw it, at the beginning of 2018 with the Trump tax cuts. That was, regardless of our thoughts on it, it was, it reflated things for a while. You saw what it did to the stock markets, even just talking about it. And so, the chance of something like that happening again, kind of a reflation of everything, that possibility exists. I wonder though, just how much longer can we go in this direction before it's no longer sort of a proactive policy that central banks or governments have to institute to try and fix things. They'll be forced to move to a reactive stance, right? Similar to what we saw in the financial crisis. The government had to react and bail out large institutions.
Problem, reaction, solution.
Yeah, exactly. Yeah. And that could be where we're heading. You saw the Fed have to react back then. So I mean, right now, it's for a little while now, a year plus, we've been moving in a tightening stance. You saw the Fed; they're slowly raising interest rates. They're unwinding their balance sheet through QE. You have the ECB, which just very recently halted their QE program.
Yep.
Bank of Japan, I don't think they're ever going to stop QE, but they're slowly moving that direction. I don't think they're ever going to stop, but they're somewhat hawkish, relatively hawkish, I guess. So. And you have the Chinese economy faltering, and you're seeing their government respond very differently than they have in the past. It was maybe a year plus ago where you had some senior officials in the Chinese government talked about the possibility of a Minsky moment over there, where they have so much debt where it gets to the point where creating more debt is not creating economic growth. You're actually slowing the economy over the short term, not just over the long term, because we know that's what it does over the long term. And so they've taken some very serious steps to deleverage, attempt what they would call a soft landing for their economy. I don't think they're going to be able to do it. But I think this trade war talk, these tariffs, have also kind of exacerbated their situation. They also might have come at maybe the worst time possible for the Chinese economy. But that's where we're at right now. If some entity, government, central bank, can reflate things, maybe there's still time for them to act proactively. But I think more and more, the longer this goes on, the more I think it's going to have to be a reactive policy change. And of course, for precious metals, that's for a while now. I've talked about, what is it going to be that really ignites precious metals? Not sends them to the moon or whatever, but you see some life in them. Silver above 20, just as an example, or gold above 1,500 or something like that, 16 or something. I've talked about the Fed loosening their policy, whether that's through stopping quantitative tightening, through lowering interest rates, or even just stopping their current path. I don't even know if current is the right term anymore because things are shifting so quickly. But and that's kind of where we're at right now, I think, is we're kind of slowly moving in that direction, that pivot the Powell pivot, I guess, if we can call it that.
Well, and speaking of quantitative tightening, Powell, he's been making noise over the last week or so, and now later today, they're going to either raise rates or not raise rates. And at the end of the day, Matt, does it matter? Does the yield curve inversion matter? I mean, won't the criminal banking cabal just make the necessary adjustments, print whatever amount of currency is needed, smooth the charts in their own favor, and throw us, the crowd, a few crumbs in which the crowd will cheer wildly and go, "Yay, we're saved." I mean, isn't that the new normal, or am I still too cynical?
Yeah, no. I think you're right to be cynical. I I mean the end game. It's a matter of how do those things happen. But I think your broad generalizations there are spot on. That they'll end up winning. It's like when you see a bank trade a specific commodity and seem to always make a profit regardless if the price goes up or down. I mean, I think that's kind of how it is with the economy. That
Yes.
regardless of if we have a crash or not, they're going to profit. And I think, as I said earlier, we're getting closer and closer to that. I don't think they can just keep reflating this infinitely. They're going to try, but I think we're going to have a downturn before we see a massive, intervention again, and they'll profit from that too, whether it's a bailout or it's low interest rates, QE, and of course what you referred to, throwing the crumbs to the people. That's helicopter money. So I mean, this decision by the Fed to raise or not to raise for this December meeting, it will, I think, influence to some extent when things go down. But you're right, over the long term, when does yield curve invert or how much? That's not that big of a deal. But it's going to be interesting. It'll be interesting. I during the summer, I started to kind of make the prediction. I said in a lot of my videos where I was basically saying, you're not seeing this from a lot of the mainstream media. You're not seeing this from a lot of the big analysts out there. But I think by the end of this year, the Fed is going to be forced to start to reverse. And of course, people know, they're saying, that's middle of 2019. Some of the bit more bearish ones, 2020. And I said, by the end of the year. Now, will they lower interest rates by the end of the year? Will they do QE by the end of the year? I think that'd be quite a stretch for them to actually lower interest rates in this meeting, but they're pivoting. They are. And so even if they do raise interest rates, it's going to be a dovish rate hike. It's going to be a dovish.
They don't have to raise interest rates. I mean, they could say, well, we're not going to raise interest rates this time.
Right. Yeah. I mean, you're either going to hear, we're moving them up a quarter, but we're going to be more responsive. We're going to take a more wait and see approach rather than just data dependent. Or they'll say, we're data dependent, and then all of a sudden, the data says, don't raise rates anymore. Or they're not going to raise rates, and they're going to say, I don't know. If they don't raise rates, I think it's going to be, I think that's going to be kind of a good signal that things are going to be very real in 2019. These hypotheticals are going to become a reality of what is it going to look like the next easing cycle by the Fed? What is it going to look like? I heard Peter Schiff, I was listening to him the other day, and he says next time the Fed cuts rates, it's not going to be by a quarter percentage point. It's going to be all the way to zero, or even negative. And we're going to see if that bears out to be true. Are they going to? Is Powell going to kind of continue in the footsteps of Bernanke and Greenspan in raising rates despite all these warning signs, and then ultimately have to react very quickly with very extreme measures? And of course, that's what you were talking about earlier. It would be no surprise if that's what they end up doing in 2019 or 2020. The create a problem, wait for it to play out, and then propose a solution.
Exactly.
So you're right. I mean, I don't know. I've heard both sides of the argument, but I've always just been of the opinion that, crashes are going to happen. This next crash is going to happen. It's going to be both economic, and we're going to see it in asset prices, real estate market, stock market, et cetera. But the response to it is going to be inflationary. It's going to be QE. It's going to be helicopter money, money for the people. It's going to be whatever else, government policy, bailouts, student loan forgiveness, or whatever else policies they want to throw out there, another stimulus package. But I think the end is inflationary because they're just it's just not very palatable for politicians to take the hard make the hard decision over the short term. They'd much rather kick the can down the road, and we're just going to see
Well,
that again.
yeah.
But
Yeah, they would love to just continue kicking the can down the road, but I mean, it's got to be getting it's that road is getting very long in the tooth at this point. I mean, they've got to be coming to an end, or they've got to come up with some other magic trick, that we're not familiar with. I mean, nobody had ever heard of quantitative easing, 10 years ago or close to 10 years ago now. Ain't nobody had ever heard of that, so they've just made this nonsense up. I mean, yeah, it's at the baseline is it's just money printing, but it was packaged and presented as something completely new and different, and no one saw that they were going to just start printing money hand over fist. They didn't see it. Nobody called that, and it's been a disaster to our economy. I mean, you talked about the corporate debt. I mean, look at what's happened. I've been talking about it for at least 3 years, and that's the corporate stock buybacks. And I said a few years ago, I asked somebody that at the time I had held in very high regard. I asked them if this was a problem, and they said, no, it's not a problem. And of course, it's a problem because there's only so much of a company that can be eaten. You can only eat so much of your company
yeah,
before it becomes a real serious problem. And since they haven't been reinvesting in new technologies, in new products, in new employees, new ideas, they've only been doing stock buybacks and driving the price up. Well,
well,
that can only last for so long. And
yeah,
now we are seeing that we are at the only for so long period. So,
yeah. I mean, it's I think you could tell a lot about an economy if you give a corporation, or in this case, many corporations that basically, as a result of this, the Trump tax cuts at the beginning of the year, got a big pile of cash that they
right,
repatriated. Take a corporation in a given country, given economy, give a big pile of cash and watch what they do with it.
right,
Right? Naturally, you'd expect them to invest in new factories, new capital, invest in the personnel, give them higher wages, whatever it is,
whatever it is.
not buy up their own stock. I mean,
Right.
that's like, and yet that's what we've seen. And I think that's some people look at like, well, this is a serious problem for the stocks because they're being kind of pushed up, and it's not reflective of real demand of real sentiment. And I agree, that's one problem. But the underlying problem is like, why does it make sense for them to do that? Like that says a lot more about our economy than just those individual corporations or just the stock market as a whole.
Well,
So
they do it because it makes them wealthy. It makes a handful of
yes,
the C-level scumbags wealthy, and everybody else starves. I mean, that's the bottom line. So that's it's the whole thing is disgusting,
yeah,
and it's any wonder that I'm as cynical as I am.
yeah, well, yeah, you are pretty cynical, but if if
I'm
I
okay
could,
with it too. So
yeah. Well, you're a happy guy. There's two ways to go with this. You can be very cynical and kind of depressed about it, or you could, take a more lighthearted approach to it, or I shouldn't say lighthearted. From our past conversations, the right way to look at it is, yeah, I'm cynical about everything in this world, but my eternal perspective is always, looking up.
yes,
Uh, yeah, and so things like faith, I mean, that plays a big role in why you and I
yes,
can be very cynical about the economy, about society, etc., and yet we're not drinking ourselves into oblivion because of how depressed we are over it, or we're not like nihilists, like in the sense that like we just don't care, like, yeah, this all sucks, and the world is just going to a terrible place, and that's just how the world. No, we have a very different opinion on it. But if I can finish, with one thing,
sure,
you're talking about banks, central banks, and governments, and how they're going to respond to this next crisis. I think you're talking about, kind of coming up with a brand new policy that nobody really tried before. I think QE, we're going to see QE make a reappearance from the Fed, from the ECB. See the Bank of Japan do it again. Lower interest rates or negative interest rates, yeah, but those are, negative interest rates, QE. Those would have been considered exceptional, almost unheard of in the last crisis. People expected this time around. So you got to wonder, what can they do above and beyond that? I brought up helicopter money, either through central banks or governments, specifically giving money to people. Whether that's universal basic income, it's another stimulus package, whatever. But I also think that, from central banks, you've already seen it with some, like the Bank of Japan. I think the Fed, the ECB, they'll do it too, and that's buy more than just government bonds and mortgage-backed securities in the case of the Fed. I think you'll see them buying many other types of debt, consumer corporate debt. I think you'll also see them buying things like equities, maybe even real estate. I think that one would be a little bit of, maybe a bit of a stretch. I don't know, but even just equities, intervene in the stock market. I mean, that's what we don't have to wonder too much about what they're going to do, because some of these banks, like Bank of Japan, they've already done this type of stuff. And so I think that's what we have to look forward to next time is you're going to see the Fed. For a long time, people have talked about the plunge protection team, the Treasury, the Fed, et cetera, and their interventions in the markets in the last 10 years. It's going to become blatantly obvious. Not like we see all the evidence of it. We just don't have like hard proof. They don't talk about it. It's a shady business. So it's going to be, you're going to be able to find on their website as easily as you can find their current balance sheet of bonds and whatnot. You'll see U.S. equities listed up there as well, and that's just going to be another tool that they use to kind of try and reflate the system and make the rich richer. And this isn't make the rich richer. It sounds like I'm some sort of like a commie here, but I'm not. I just want freer markets, a freer system, I guess.
Right. That's all. I want people to be wealthy. I just want the playing field to be level. That's all I'm asking. Just make the playing field level, and the market will take care of itself. But they can't do that, because if they did that, all of these issues that we've just been talking about, they would all blow up. And if they all blew up, then we would have a global depression that would take probably 10 to 15 years to wash out, which I'm okay with. But the people that are ultra wealthy, they're not okay with that, because they would lose everything. Then they would be equally as poor as everybody else, and we would have to come up with some other type of system. And that's just not going to happen. I mean, maybe I'm wrong in saying that, but that's what it looks like, because everything is so interconnected. I mean, we were talking about Deutsche Bank and the fact that if Deutsche Bank goes under, look at what would happen if that one bank in Germany went under. It would directly blow up J.P. Morgan, Citibank, Wells Fargo, Royal Bank of Scotland, Lloyd's of London, HSBC. All of these banks would disappear instantly because of the derivatives, period.
Yeah,
So they
pretty much. I
can't
mean,
allow that.
Yeah.
I mean, think about that. Think about the impact that would have on the global economy, on not just the United States, but Canada, Mexico, every European nation state, Russia, China, India, Australia, all across the world. Everything.
You bring up a great point. What would that do to our economy if that happened? I think that would be a really good thing to happen
It would
over
be
the long
great.
term. It would be great. And just being over the short term, it would be something that politicians, central bankers, the ultra wealthy, and most citizens, it's something they wouldn't stomach. They choose the easy way out now
Right.
rather than deal with that later. So
Right.
it's
Give the debt to our children. So let them deal with it.
Yeah,
Because
pretty much.
That's what's happening. But anyway, we could go on for the rest of the evening, Matt, but probably should cut it off there. And I really appreciate all your time and your great analysis. And I love what you're doing. Love the youthful vibrance that you bring to the table. I love it, and I love what you're doing with your channel, the Silver Fortune. And I know that right now you've got a lot of things that are going on outside of doing your channel. But I know that you like to do the live streams, and they usually are in the evening, but some of them have been in the morning sometime. So if you would just kind of let us know what to expect, with the Silver
Yeah,
Fortune.
yeah. So I put up five, six, seven videos a week. Depending on what I have going on. And yeah, as for live streams, a lot of times it's the mornings that work out for me. And I started it, and I was like, I'd be having like what 10 people tune in because like who's at their computers at 7, 8 a.m. But it turns out that a lot of people are because they're at work and they have nothing better to do. They're just watching YouTube anyways. Um, so, a lot of times it's in the morning, sometimes in the evenings. Otherwise, yeah, you can find me over at Silver Fortune. If you're more of a podcast listener, I'm on most podcast platforms that I know of. I mean, the big ones: iTunes, Spotify, Google, Pocket Cast, etc. So you find me there as well if you prefer the podcast platform. I know I usually do that when I'm driving, if I can, because it's just easier, and I don't have my phone. Certainly not watching my phone while I'm watching videos while I'm driving. I'm just listening. But I know a lot of people like podcasts, so that's another option as well.
Sounds great. And it's all under the Silver Fortune banner, right?
Correct.
All right. Well, Matt, we'll get you back on as the year, as 2019 gets underway, and I want to have you and Lewis on and do a roundtable with you guys, and have the three of us kind of kick it around and see what we can come up with, and hopefully we'll be able to do that towards the end of January. But in the meantime, have yourself a great holiday, and Merry Christmas to you and the family. And I appreciate all your time this afternoon.
Thank you very much for having me on today, Rory.